From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for February 12th, 2016. In just a moment, we'll be taking a look at the EURUSD, the euro versus the US dollar for today's trade analysis. But first I want to recap a couple of the trade suggestions made over the past few days. First off, starting here on the GBP USD Great British Pound versus the US dollar. We were looking at buying opportunities yesterday. If you watch yesterday's morning analysis video, buying opportunities on dips into support. We saw the market come back down to the bottom of this support, the blue shaded area right around the 1.4400 level, and you can see found support there and began the rise, moving all the way back up here into the 1.4500s, the orange shaded area now holding as our resistance. So if you were in the buys from down here at the blue shaded area, which we were in from yesterday, you're in the profit and you should be protecting or closing profit. I've now closed the entire position as it settles out here into the mid to low 1.4500s, right around the 1.4550 level became the area to go get out of the trade. So we're locking in or closing about 150 pips of profit on the trade for the pound dollar from yesterday. So decent opportunity yesterday. Hopefully you took advantage of that. Definitely watching this orange shaded area. If it can break above it, we'll look for some more movement higher. Back up here towards the pink shaded area would be your next resistance level. That's into the mid to low 1.4600s. Otherwise, reversal from here takes it back down towards the blue shaded area. Another trade we've been studying since yesterday's trade room, of course, is selling opportunities on the AUD/USD. If we take it out to the larger time frame, first off, we've been studying the long-term downtrend. We zoom it in a little bit here, and we've been studying the fact that we came back up underneath the triangle pattern. You can see the red triangle pattern over here came underneath the long-term black trend line. There it is right there. A little bit better to see that triangle and the trend line. Came underneath it, challenged as resistance. We take it back down to the 4-hour time frame. Zoom it out. There's the same black trend line, the red trend lines of the triangle pattern. You can see we hit it, came off of it. Now we're making a new lower high. The question is, now are we going to see continued reversal and the market push down, or is it going to challenge higher? Well, we're in the trade. 71.15, 71.20 was the suggested area. The blue shaded area was the suggested area for going short and selling this currency pair yesterday. If you're in it, you're into profit. I'm sitting right now about 22 pips of profit. Of course, the trade manager is applied to the trade, and it has moved the stop loss already to break even. We can see the green shaded area likely to be a little bit of congestion and support right around this green zone as it moves into the upper 7,000s. But if we can get through that zone, and let's say getting through 7,060 or so, we'll look for it to continue to pressure lower back down towards the pink zone. The bottom of our little range here highlighted by the black box, that's back down towards 7,000. If the market can break through that pink zone at any time over the next several days, we'll look for much deeper back down into the 69s. Of course, we know that our resistance is the blue zone. Continue to watch for that to hold until or unless something changes and it breaks above there, we'll look for it to go higher. A little bit of a head and shoulders maybe developing inside this black box, shoulders along the top of the black box with the head here. So a breakdown of the pink zone looks for further reversal for the AUD/USD. Moving now over to the EURUSD, the euro versus the US dollar. I'm going to start out here on the weekly time frame because I think it's important for us to take note of the historic levels of resistance that we're seeing right now. We're looking all the way back to the beginning of 2015, end of 2014, highlighted in the red box that you see here on the chart. You can see that large red box. That's important because as we begin to zoom it in, looking at that red box, look at the resistance into this area right around the 114 level. 114 being a key level of resistance. It's been that way since the beginning of 2015. So the closer it gets there, we're watching for resistance. We're watching for potential reversal for this to turn around and go back down, at least for a short period of time, maybe even back down to the 1.1 level becomes a potential opportunity for support. 1.1 all the way back down to where this area of resistance was back here just a few weeks ago, back into late 2015. So key area of resistance. Going long right now, buying the euro dollar just doesn't seem a logical situation as long as it holds underneath 114 because there's a great expectation of resistance here and has been since the beginning of last year. So that's a real long-term outlook for it. But again, being long or going long or holding longs becomes risky as it sits underneath the 114 level, as you can see, going all along here top of the red box. Take it on down to the daily time frame. Zoom it out a little bit here so we can see that red box. We can see, guess where the market has come to a screeching halt? Right there at 113.70, right there at the bottom of our green shaded area. We've had that there for several weeks. Nothing really new has changed there. Fibonacci from high to low of the blue trend line. High to low of the blue trend line. Fibonacci puts the 886 right at the bottom of that green zone. So we know where the resistance is historically and factually. The resistance is right there. If it can break above there, if it can break above 114, then we'll likely look for the continuation higher. Next area to watch for is going to be this pink zone. Let me see if I can drag that over a little bit further for us. This pink zone right here becomes our next resistance. That's up into the mid 115s, but it would have to get through that green shaded area before it could even consider going that high. So what are we looking for? If we're not looking to buy it, we're looking for clues and evidence of resistance and reversal here from the highest peak highs for the euro dollar. Let's take it on down. Actually, let's just zoom it in again. You can see 1, 2, 3, 4 days now hovering around this orange shaded area. 112.65 to 113 is the top of that orange shaded area. It never did clearly open and close above it. So the next thing we would look for a reversal would be, guess what? An open and close back below it. Gives us a clue that we're going to start working our way lower again, back down towards this yellow or purple shaded area, become our next potential support levels on the way back down. Take it down to the 4-hour time frame. And we can see we did get that little bump towards the 1370 level yesterday, now coming back down. I will definitely be watching this orange shaded area again today. If it opens and closes underneath it, if it can stay underneath that orange shaded area as resistance this time, getting back underneath there, it may begin our first clues of a lower low. You know, that's what I'm looking for. For a change of the trend, we look for a new lower low. You know, what is the trend? The trend right now is up. That's not too hard to see. You go along this trend line, you say, well, the trend's up. So what are we looking for? A change of that trend pattern. The change of the trend pattern, higher lows and higher highs, becomes lower highs and lower lows. We don't really significantly have that yet, but if we can get under that orange zone, get under that blue trend line, and make a new lower high, that begins our clues to trend reversal. That's what we're looking for, a clue to trend reversal, a change of the overall pattern. And then we could begin looking for opportunities for this to go a little bit lower. We could take Fibonacci of that same range, likely to put the 236 somewhere close to that yellow zone, 382 somewhere close to the purple zone. Let's just, instead of speculating, let's go ahead and draw that out. Fibonacci from the low of the blue trend line to the current resistance high. Actually 236, a little bit higher than I expected. Right there at 112.40, not quite all the way down to the yellow zone. I suppose if I was to take that Fibonacci and move it down to this low down here, gets it a little closer to that yellow shaded area. 382 down here closer to the purple zone. 618 of that same range. Guess where? Right down here towards 1.1, where I said it could go back down towards if it continues to break lower and change the direction of the trend. So we're watching for clues and evidence of reversal, lower highs, lower lows, and for evidence of reversal to go back down for a period of time for the euro dollar. I don't think there's any real reason to buy this as it gets closer to the green zone because we've already outlined that as a key area of resistance. So for me, mostly this is a sell on change of the trend pattern and clues and evidence of reversal for the euro dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.